Futures are basically flat ahead of the president's State of the Union address. Currency wars heat up as European Union ministers are at odds over the strength of the euro. Can this upper range hold in the market? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So in terms of macro headlines out there right now, of course, we have the currency wars heating up, as we just mentioned, and North Korea's third nuclear test. When you look at all the headlines, Scott, what are you focusing on?
Well, when I saw those headlines hit last night, especially about North Korea, I'm like, ooh, I bet your gold is up and some of the overseas markets are down. And then you look at the overseas markets, the European indices took it in stride. The Nikkei was up another 2%, and nobody seemed to care. And gold, I think, is a little flat to down. So it feels as if, the same trend is in place. And as far as, the currency wars, we've talked yesterday about perhaps a little bit of a direction change in the yen or in the euro because the G7. But, you look at the chart here of the FXY, and if you've been trying to catch a bottom, you've been trying to catch a bottom for a significant trend to the downside. And if you look here, the 8-day moving average has been controlling this downside all the way down, never even making it to the 21 days. So here we are near lows again, so guys trying to buy the bottom here are getting, kind of beat up, and those shorting the YCS are also getting beat up. And these same individuals are probably the ones trying to roll up shorts in the spiders. And not only are they, losing money, being short, they're missing the opportunity of the rotation in all the sectors that have been going on that have been paying traders.
Right, and the S&P seems to be taking all this in stride. What are the key levels you're watching there?
Well, the S&Ps have been doing this stair-step higher. Sometimes it gets a little bit more extended or there's a little bit more energy there. But recently we've had a few inside days. And inside days are good because they digest prior moves. And if you look at the stair-step approach we've seen to the spiders, here was the big gap up to start the year. And then this was your digestion. This was your time to get involved in a lot of swing trades, maybe some core trades. And then here's when we start to stair-step higher following the 8-day. Remember, SPX 1474, which was a big level, that was 148.11 here. We got above that. And then, we had to build a new floor right around 1500 in the S&P. I like showing the spiders because a lot of people trade the spiders. I like to show where gaps exist as well. So anyway, got a little choppy up here. And you know what? If you wanted to take some positions off and go from 10, 15 positions down to 4 or 5 or whatever, you could do so. But we're still just following the 8-day, and here we are digesting. If we start to get above 150, 190, we're going to extend into new highs again. So stay with this trend until it really changes or severely changes, but just do a little bit less and trade a little bit less and just be a bit more specific if you think we're getting close. All
right, well, let's turn the spotlight to stocks looking for a potential breakout. Let's start with OCN, which has been best in breed in the mortgage service group. It's currently basing at highs. So does it look as though it could be poised for another breakout?
It does, and this is the type of trade that we're getting right now, because once you're in extended time periods, you no longer really have that core breakout trade. You have digestion add-on trades for cash flow, or if you were holding onto a swing position, maybe a spot to add a tier to then take off a tier. So if you look at OCN, you will see the last time you had a nice little add-on trade was right here, right when it cleared 38. And then what did it do? It took out this prior high, and now it's holding in again. So those who are hanging tough with this one, just letting it trend, great. For those looking for a trade, it's going to have to get above, just say 4150 for it to extend once again. But just remember, these tack-on trades should not have the same size as a trade, when you're looking for a breakout or something more significant.
And Citigroup has also been acting very well. At what level might we see a breakout there?
This is the same thing. It's been trending higher. Every now and then you get a 2-3 day breakout, and then you get digestion. And with this one, I know it's come a far way or traveled a big distance, but it's now consolidated again. And if you look here at Citigroup, the time when it was really exciting was, if you remember back here when they announced, I hate to say it, the layoff. For some reason, layoffs announced in the financial business, spurs rallies, and this was one of them. Here was another one. Then you had the gap up. And then since this gap up, it's really been just hovering in a channel. Now it's in the upper end of this channel. So I know yesterday We added some to try and see if it could break out above this 43.45. Maybe it wasn't ready. So, if it can get above 43.50-ish, maybe you get that sexy trade into new highs. But until that happens, just stick with tier 1. But this is, again, the type of trade we're looking for. Same kind of goes for Bank of America, just to throw it in there quickly, where here is your core trade above 9.95, your add-on trade. And then here it's been hovering higher, getting close to $12. If we can get above and clear $12 with some volume, you can get that type of trade there as well.
Another stock that's been trending higher, eBay's had a few good quarters in a row. It looks like it could potentially go higher. Where might we see that breakout there?
This one also trending higher. Sometimes it pays to be in more, sometimes less. And sometimes I see guys having a little bit more success by just holding less. Because the more you hold, the more agitated you get through some back and forth or some computers pushing things around. And if you look at eBay, it hasn't had a sexy move to the upside, but it's been trending. This was the first trend that it followed, and now it's starting to get a bit of an accelerated trend. And at this point, it's flagging once again, looking good if you've been just holding long. It's been following the 21-day here, touched the 50-day. And now it could get a bit of momentum, but again, momentum's hard to find if it could finally get above 57 for a trade. If you're trading for a breakout, just be careful. If it gets above the momentum level, it needs to stay above there. But right now, this has been trending very well. And even Yahoo, which was on our 2013 pick of the year, seems like it's on its way to 23, 24.
Well, turning to agriculture, Agrium has been a best in breed in ag. It's flagging at highs above its 8-day, so could a breakout be in store there?
Same scenario. If you're looking for the leaders, this has been one of the leaders of the ags with Monsanto. You go to AGU and it's knocking on the door of this resistance. We could get something going here. It would probably be above 115 with some authority, so that would be your breakout trade. This was your last breakout trade that was pretty clean, and that was above this 108 and 109 area, and now it's consolidating well, so it seems like it can go again. But again, if you traded it right here, don't put the same amount of size you had on here up here, as it's a little bit more prone to some type of failure, as these trades are a bit harder and trickier to have success with.
Well, coming up, we're going to go on the flip side and look at stocks looking for downside action. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and now going on the other side of the coin and talking stocks that could be looking for more downside action. Let's start with eBay, which is trading at lows and looks like it could be poised for a move lower. So what are the levels you're watching in eBay?
Well, it's BIDU. We just went over eBay, but eBay was on the flip
that's
side.
What I meant.
It's
Sorry, BIDU.
No big deal. BIDU, much different chart than eBay. This one is actually gapped lower and has a big gap that could create more downside. If you go right here to BIDU, you will see here it is. Okay, the question is though, can we get downside momentum? And here is your hole within the chart, and here are your levels. So right away, if it were to go to the downside, it would have to break below 95.61. But break below this, and there you go, down to support. I was like, the giggles. Anyway, with that said, if it were to break above this, what is this, 99.65, it could then fill the gap. So right now this gap still controls it. So watch this inside pivot range. These type of ranges could be a little frustrating. Wait for the actual resolution, and here's your resistance, and here's your support, and see what happens. It needs to break below this to continue to the downside.
And VMware, and I really mean VMware, fell more than 21% after earnings yesterday, broke below Friday's low, so it's more downside action in store for VMware.
This one, again, you didn't know which way it would go. If it was too emotional to the downside, but yesterday it started to resolve earlier. So if you look here at VMW, you will see it too, huge gap. And when these gaps don't get filled, that means that nobody thinks that there's a discount here from above 95 to below 80, so that shows you weakness. So yesterday it started to break below a level. Some guys had some, what's the words? They got rewarded for being short here. The question is, can it break, the lower end of this pivot and hold below it? So these trades are sort of dangerous, but when they have follow through, they pay you. So 76.25 is pretty big support. But then, what it's knocking on the door of is a major level here. Let's I'll show you on the weekly chart. Look where it is as far as major support. So it's going to need to really have volume and have a high break to break this. But if it does, it could really fall apart. So at this point, watch this lower level here. This big gap is in control, and if it breaks below it, I would say shorts will get paid. But again, know if that's what you're good at, because I know for me, it's hard for me to short lows like that.
Now, what about a stock like Coach, which has continued to show lots of weakness and is actually approaching a pivotal support level right now?
Same type of scenario. It's actually been a laggard. It had a bounce in the beginning of the year, but if you look here at the chart, you'll see the same similar pattern set up. Here was your gap to the downside. It hovered within that gap, okay, and then it continued lower. Okay, and it seems still weak. Okay, it's not but look where it's hovering now on some major support. So if we take a closer look here, so you could see it, you will see that here you go. This low is 48.38. So if it breaks below this, you go to your weekly chart, and this too is at a major area going across. Some would say on the weekly chart, which I'm hoping it's not the case, you have a huge head and shoulders top type of formation here, and right now it's hugging in right at the neckline. So I don't know if it means high-end retail is done or whatnot, but at this point, this is a very important area. You probably will find some fundamental individuals looking to buy there. So just be quick on your feet and just make sure if you are shorting it, you see the relative weakness and you can handle it. Because for me, these are like the end of the juice type trades. Where the meat and potato of the downside is kind of out of the way. So the attack on trade on the bottom is just something I'm not good at if that takes place.
Well, one more to talk about. Amazon continues to see downside action. It lost its 50-day yesterday with an additional loss of nearly 2%. There's more downside in store here.
See, this one I think is a bit different because it's starting to technically get weaker. Where you saw in earnings, everyone was scratching their heads again. Why wasn't it down more, considering that it wasn't really a blockbuster report, but everyone keeps talking about the margins, and once the margins get better, the earnings are going to ramp up. But anyway, technically, 284 was the big level on earnings, and since then, it hasn't really acted so well. So you look at the chart here, and you'll see, remember we came in here, we talked about this 284. We said if it can't get through 284, you could see a decent short, and you had a first move lower. It's been consolidating down here. A few days back, we tried to short it, as it broke the 50-day, but reclaimed it. And then finally yesterday, it broke and closed in the lows. So at this point, I am a little short, and I would probably give it to 260.55. What I don't want to do is I don't want to see it reclaim 50% of this day yesterday. And if it can go sideways, I think you could add to your shorts if it trades through 256.60 for what could be more downside to the 250 area or even below. Because right now it is lagging. And finally, this one also isn't at huge support. You look at the weekly chart. It's really come a long way, and it's been one of the chosen ones. And it seems as if there could be some a little bit of cracks in the armor.
Time for some quick hits. Apple gained another 1% yesterday, filled half its earnings gap. Today, Tim Cook gives his keynote address. Can the oversold bounce be sustained?
That's a great question, and I'm hoping to make money by answering the question, because last week, finally, traders were thirsting for some type of tradable bounce for more than a day, and we had it. I think it was on my virtual trade floor for about 3 days, from Wednesday into Friday, maybe even yesterday, where from 448 to 485 was a nice tradable move with some actionable areas in the middle. Yesterday, I'm not even talking about what I did, but anyway, you look at the chart right here, and you will see a major downtrend. Ever since it broke 700, the 21-day, it's been trending lower. Okay, there's been a few bounce type trades in the middle. Right here was a decent one, and then towards the year end or the beginning of the year, we thought perhaps this time would be different. Nice little bounce trade, but it failed at the trend line. And here we are again. It's actually, as I look at it now, it doesn't even look that powerful. It's just been slowly going up. And we're coming into this big trend again. So I would say short term, levels to watch. You have 473.25, and then you have this prior breakout. If this has any hopes of continuing, I do not want to see this thing close below 465. If it wants to continue and break above yesterday's high of 484.94, you then have the trend line that comes a little bit closer to like 495. So the question is, can it finally break and close above this trend line and perhaps get up to this 550 that some guys on TV were talking about yesterday, which is the 200-day, which still wouldn't be that big of a bounce. The question is, can Tim Cook deliver? I don't think he's really delivered since he's been CEO. Everyone wanted a stock split. He didn't give it. 2 quarters in a row, he missed the estimates. People want cash being delivered back. They want to buy back. They want to know what's going on. They want them to use their money. So if he comes out stale today and doesn't do much, and then he sits there at the State of the Union tonight, I think a lot of traders and investors will be a little upset.
All right, well, let's move on and touch on gold. GLD gap down yesterday, is now trading at a 5-week low. How do you handle it now?
This one's frustrated almost everyone. If you're a bear or bull, it all depends. Like, you had to be really perfect. And last week I tried to, play it to the upside. I was cheating. I was long like 162 in the GLD, saying if it gets above 163, 164, it could add. Then Thursday it closed below, got stopped out around 161-ish. Then yesterday it looked as if it was going to fall apart. So if you were a bear pressing, you probably were also frustrated. You look at the chart here. Here was that wedge type formation, so it gapped down and closed off the lows. I would say maybe today, if it trades above yesterday's high of 160-ish, you could see a bit of a gap fill here, but this level should be resistance now, this 161. Overall, it's been a very, very hard trade for anyone involved. I guess the only one that hasn't been is for the macro investor in gold that says right now this has been a decade-long move, and all this is sideways consolidation to absorb what was years and years of gains. So at this point, they're not frustrated because they don't overly do it, and they're still saying you get 2,000, 2,500. For me, I'm not sure. I'm just going to continue to give it some space now.
And over in retail, Coors reports today before the open the stock was retail outperformer of 2012 and has beaten estimates since its IPO. Now, you typically don't take stocks into earnings, but did you consider maybe taking Coors?
I spoke to Mark. Maybe people heard me on the radio. I was saying, we should do a call spread because this was one of my 3 amigos type trades. Everyone's like, Scott, what was your 3 amigo trade? Well, they know last year I came out with 3 new issues that were public within the past 2 years that had the ingredients for a nice macro move, ingredients for a macro investment where you could throw them in the drawer. And the 3 stocks were Coors, LinkedIn, and Dunkin'. Dunkin's near historic highs. We all know LinkedIn is above 150. It screamed after earnings. So Coors, I was like, let's do a call spread. I didn't do it. Some guys were talking about it on the site. Earnings did come out this morning. If you look at the chart here, you will see, let's go to the weekly chart. It's been a really, really nice mover. It's had a nice big base once again for, I would say, almost, 7 months. And now for it to be sustained, it needs to get above 60 and stay above 60. I do believe it's around 62, 63. If it stays above 60, you could see, further upside where the sky's the limit here as, you had a nice base breakout, nice break, base, and I think they did deliver this quarter. You could see a move up to almost 70. If there's momentum today, why not? And, if you're a macro investor, which unfortunately I'm not holding all 3, I didn't go with it myself, you've been rewarded for being a stock picker, and you could find some of the biggest gains in recent new issues of the past few years.
All right, let's talk Microsoft, which had a decent gain of 1.2% yesterday, make a nice 3-day rally. At what point might you book some profits?
At this point, I think that because of what happened with Dell and the rally in HPQ, people are like, Microsoft has a lot of money. It's a value play as well, and people are looking at the price, where it is. You look at the chart here around 27.86. It just seems as if you go to the daily chart that it has some room if it wants to go. If you look at where Microsoft is, it's nowhere. Okay, it's been in 2 different downtrends. Here's one, and then here is another, which it's just starting to break above a bit. So for me, I'm long a little bit just to have something that I think could be a laggard type trade. And here's your 200-day. I'm not sure if it's going to get any kind of excitement here, but it's on the move a little bit. I'm trading it versus this low area, and we shall see. It's not a barn burner, but it's one of my multiple positions as I'm still in portfolio approach.
All right, and Facebook saw a downside follow through yesterday, but held its short-term support, then was downgraded and traded lower after hours. So where's the next level of support?
I've lost a decent amount of money in this thing since earnings. I remember having it for a while from like 24 to 32, and then I sold it into that invitation event that they had, and then I didn't take it into earnings. And then it was a nice trade after earnings. I remember after hours went from negative to positive. Next day went from negative to positive. So right there in my head, I'm like, what? Facebook, the forces of will 1 and higher. So I've been slow. I've been staying with it as it's shown a lot of relative weakness over the last week, costing me money. And if you look here at the chart, you will see that this was that Friday before Barron's came out with the article, okay, and it closed relatively weak, and then here was, the second day down on that article. And then if you look here, it's a typical bear flag where here's your pole, here's your flag. Market is holding near highs, and this one's holding near the bottom end of this range. So, I still have a little bit on. It's trading below support here. You do have a gap that starts at 27.42. Let's see if it can hold that. I guess I'll hold a little bit. If it doesn't and there's no bounce, I'll just get out of the way and see how it handles, bigger support, which comes in, right around 25. But overall, to me, this has been frustrating from a nice methodical hold turned into a little bit of a stubborn mess by me.
All right, and with everything we covered today, what's your focus heading into trading today?
I just want to see if we could continue to hold this upper range. Can we see another trade in the banks to the upside? Do they shake the tree around? Does some of these macro headlines start to actually hit the market? Apple will be interesting to see what happens at 10:15 after Tim Cook speaks. They also have their shareholder meeting. They have a few more things down the road if they try and sell this event. So overall, I'm trying to stay with the rally, take additional cash flow out of chart pattern type plays. But overall, the trend's been my friend, and it hasn't been the easiest environment to stick with, but it also hasn't been as hard as people are making it out.
All right, that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.